Good morning, Scott Redler, T3 Live. Welcome to today's morning call. It's Friday. It's the relaxed version. It's the 9 o'clock, a little late, short version. It's been a long week. A lot of you guys have been giving a lot of good emails, a lot of nice tweets. Everyone's kind of high-fiving a bit. So at this point, just bring it down a notch. Yes, the markets had a nice move. Yes, Tuesday we ignited. We held in there well. On Wednesday, we've had stock selection and patterns breaking out, rotation. Just don't lose sight of the fact and don't get too giddy, because when you get a little too giddy, you tend to overdo things. You get a little loose. You buy too many shares, and you give back some money through slippage. And as a prudent, disciplined trader, you don't want to have slippage. You always want to be on your toes. You can be happy about your performance of the week or the past few weeks. You could also, if you're not happy, look to see why you did things a certain way and maybe look at that over the weekend. So don't be revenging either. Today's quad witching, meaning that a lot of the dealers and option specialists have a vested interest in a lot of whole numbers or a lot of mid-tier numbers. So there tends to be some wacky movement or no movement. So combine that with the tournament going on, and this could be a pretty quiet day, a day not to push buttons and overdo it. If you look here at the chart of the S&P and the spiders, you will see we've had a nice move. I'm not even going to talk about this relaxed uptrend that didn't even get tested. Or here you have the momentum uptrend, the ascending channel that we followed. Here is that small correction that held right into the prior support. This is the snapback that gave shorts something to think about if they were going to roll it up, and this also gave us some conviction or even just some time to re-enter some positions. It's not a bad thing. If you exited out a lot of your positions right here, that was prudent. You didn't know. We could have went down lower. We could have tested the 1320, but you know what? On this snapback, you had to say, let me take a different approach, switch gears again, start getting back into some positions I like. And that's actually what I did. That's when you saw the virtual trade floor get back to 7 to 12 positions long with a hedge. And then you had this nice breakout. Here's Tuesday, nice inside day. On Wednesday, yesterday you had a little follow through. Now we're opening up right into that 1404 to 1440 resistance zone. So here is one level. If you look, this is 1404, which will probably hit today. A nice area to take some profits after a big move on this weekly chart. And then a bigger level that could be reached at some point. It could be in the next, through earnings season, you have 1440. So just know where we've came from, look at plan on where we can go, and just don't get ahead of yourself. As at this point, I don't want people, one of the things that I always say is you don't let your highs get too high, your lows get too low. Stay even keel. Be happy, and you could celebrate, and you could be, looking good with your progress, but don't overdo it and don't just get loose, because when you get loose is when you make mistakes. As far as charts, take a quick look at Apple. It was up like $4, now it's flat. Yesterday, first mini tradable down move as it recrossed the prior high here of 594.72. Came off the lows, but we got to see what happens here. I actually see an interesting pattern here on the 8-minute. For those of you who are willing to play with Apple today on a quad witching day or whatnot, you have a mini head and shoulders pattern. Here's your left shoulder, the head, the right shoulder. If you want to play this game, and I'm not sure if I'm going to, guys, to be honest. If I see it's already flat, so it is showing a little relative weakness, and I think the dealers want it lower. It breaks 580, 595, 580, 15 points, then takes it down to basically fill this gap down to this area. And if you look at the chart here, if it did do this move and fill this gap, which is still a big question mark, it's still not even near the 10-day, which is at 556. So this is what I just drew. This just shows you how extended it is. But again, being short this thing is an art, and it's very tricky. So just be careful. As far as some of the banks, I'm in a spot where I don't see that many setups. We've had the setups this week. These things have traded higher. They look really good. This was your Bible pattern here. Here is your momentum trade above the flag, and now, it's kind of just trending. I would take trades in the banks. They're a little bit overbought short term. Same thing with this, like Bank of America. This is the day you get excited when you have a nice tight pattern going sideways. Here's your breakout. This is the day that I live for and I love. And then you have 3 nice days. So up here, 940 is not a day to be excited about. It's a day to probably take some profits. Okay, if you look here a little bit more longer term, you will see, this is a pretty big area of resistance. So this 940 to 970 area would be a spot that I would take some profits. I wouldn't get excited and start chasing Bank of America up here. As far as some other tech names, Amazon's still in this small wedge. One way or another, it's going to break soon, either below or above. Stay tuned for that. Google's acting a little bit better. Still hard to trade. As far as an investment, I do think that this high here is not the high of the year for Google, and I know it's been in the penalty box since earnings, but if you cost average down and have your little, better prices here, it could, I might get back in this if I see some real volume above 624, 625. It can continue. It's been in this box type pattern long enough, but again, this has been a sloppy trade. Guys keep asking about LinkedIn. I am still long it. I still think it looks good. There's been a few different trades here in LinkedIn. This was the trade that ignited out of this small little tight pattern. And now it's just going sideways, not a lot of action. I've been holding small, but if we can get some volume, like real volume through this 95 area, I do think that you could add to it for momentum trade, and then the next level is 100 and above. If you look at the weekly chart, as far as this level here, it's a pretty big level. Going across. So at this particular point, it's going to need heavy volume to get through. So you want it to get through, you want it to close above, then the next zone is 100 to about 110. And then the IPO highs is right here. Big winners come from previous IPOs, and they're trying to keep this in the game. You have Facebook in, the next 4 to 6 weeks. So I would think that they want to push this higher, so this way they try and validate some of the crazy market caps that are being thrown out there for Facebook. Switching gears, retailers have been doing really well. Yesterday we bought this JCPenney on a small red dog reversal type pattern that I like to trade. Here you go. It's corrected a lot. Put a mini reversal in here where it makes a new low, comes back above, closes strong. Let's see if it can get some follow through. I'd be long here with a stop at the low of the day. Treat that way. Like UA, I think needs time. We caught a little bit of a red dog reversal at the top here. Same type of pattern, different area. So if you want to flip this over, remember what I just showed you with JCPenney, this one, put in a high, close in the lows. You could have added through the previous day's low, and you had a nice little short. And now maybe it corrects down to this moving average where you flip it over for JCPenney, same type of thing. It's come all the way in, close green. That's why if you buy it over today's high, perhaps you get that pop, and that's the strategy there on those reversal type days. As far as we had a nice cute trade in this dries. Bought it on this day, thinking maybe it would hold support. Market's been very good. Traders looking for other things to do. Well, here was another one. Day one, let's see if it can continue and get back into this 360, 380 area. This little guy, nice tight pattern here. Some sales traders like it. I'm not going to get too into it, but people were asking because it's in the virtual floor. I did buy some yesterday, and it looks like it could get going. Some volumes coming back. That's SIMG. Netflix, I am long also. You have this pattern here. It'll be very, very interesting if it could clear it. I'm not sure if it can clear it today on option expiration because 110 is probably a big strike that they want to close it on. But if it does, the next real level here on Netflix is 116.50, and then this one is 117. So, they could blow on this thing, and you could see 115, 117 that easily. So, nice day yesterday. I'm long some. We'll see if it could materialize higher. As far as the treasuries and the bond sell-off and this TBT, TLT trade, thanks I appreciate all the tweets and emails because guys have been trying to time this for years, and everyone's like, Red Dog, how'd you figure this one out? Everyone from their computers, their algos, their currency, their this, that. I'm like, I'm a simple man. Anyway, the pattern showed that it was finally ready short term, so it was worth a try. And if you look here at the TBT, I'll show you what I'm talking about. Here's what I'm talking about, guys. Here's a nice lower channel, okay, and then finally it closed above this 1970, 1990. You didn't see this for a long time, right? You didn't see this from November, December, January, February, March, April. Well, actually, we're in March now. So this day looks a lot different than these days, doesn't it? So that's why we took it home, and that's why we're staying with it, and that now it's opening above yesterday's high, and I think you could, I think it could fill this gap all the way to 21.5, 22. So with that said, some of you guys took the other side of the trade, which is the same concept, is these TLTs. Now this also high, lower high, lower high, lower high, below the moving averages. This day engulfed and closed below this major support. So the good book said take it home short. I didn't care about what the bond guys were saying. I didn't care what the people on TV were saying. I was just caring what the chart said, and the chart said take it home short. So if you took it home short, you got paid. Now it's opening lower. If you look at the chart again, as far as short term, this probably would be a good area to cover some if you're still in your tier 2 or tier 3. But I would only get down to a tier 1. And then if you're committed to this trade, give it some time, because I do think it could go all the way down to here. So just trade your time frame. So all in all, it's late, it's getting close to the open. Today's Friday. It's been a really nice week. You've had a lot of participation. You've had a lot of great rotations, chart patterns, triggering into new highs. Then you have these catch-up plays in second and third tier stocks. There's a lot going on, and the only way you're going to catch them and trade them is if you look for them. You can't. No one's going to give them to you. You actually have to do some work. And by being on our site, look in the virtual trade floor, you see idea generation happening. So just keep doing that and keep making progress. And I'm not sure if we're going to have a recap. We might. Quad witching, again, is just a wacky day, and sometimes nothing goes on at all. Combine that with the tournament, probably a day for you to do a little less. Scott Redler, T3 Live, the morning call. Maybe I'll see you at the recap. Have a good day trading.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.